I'm sure it must be really difficult to try and find some form of strategy going forward, given all the troubles that are emanating from Europe and also from the US. I know you are of the view that we should allow banks to fail. Of course, we're starting to see a lot of rhetoric out saying that when we see bailouts occurring for Portugal, Ireland and Greece, it ultimately means that banks are bailed out in a sense. Give us a view as to why you think we should allow some of the banks to fail.
The reason why I say that is that, there's this big attempt to save Greece, and it's in a sense a half-hearted attempt. So the debt to GDP will still be at a high level. I think it will still be close to 100%, even if they, write off half the debts of Greece. So what I'm saying is, you're going to do a half measure. It's not really going to save Greece. It's just going to postpone the problem. So if the solution really is to let Greece go. Let it get out. I thought the solution was that we're going to have a referendum. The people were going to decide, whether they're going to go to austerity or whether they're going to exit the Eurozone. That looks like it's been postponed now. With regard, and by implication, what will happen is the banks will fail also. So people are concerned about the systemic risk, filtering through the system. I do recognize that it could have a multiplier effect. It could catapult. It could get, a lot worse. But the banks as a whole, they have been lending irresponsibly over the years to governments, to consumers. They've relied on rating agencies, which, with the benefit of hindsight, in fact, they should have known they should not have relied on rating agencies. So effectively what you're doing is you're subsidizing a banking system that's not being run efficiently, that's allocating properly, allocating capital properly, that's, charging, market-related interest rates to compensate for the risks they're taking. So they've been, in essence, been relying, on bailouts, on this implicit bailouts. So the invisible hand of capitalism has not been allowed to work. So we need to move away from this. We need to let people know we are going to let the banks go, and we're going to suffer the consequence of it, and clean out the whole system and not let the system just keep on hobbling along. Japan is a very good example of that, where it just keeps on hobbling along. It's not really recovering. Get a little bit of growth.
Asief, but surely,
inflation again.
Asief, surely the views that you have right now, and I know that you share very similar views to a lot of the people that we've spoken to here in South Africa, surely the policymakers, the European Commission, the Troika, so to speak, are very aware of what they're doing right now, and perhaps are very aware of the fact that it is inevitable down the line. Do you think it's just an issue of being in denial, or do you think that they are just trying to manage things a lot more effectively when it actually does happen?
I'm sure they know what the issues are, what the risks are. I'm sure they're aware of it. But what overshadows all of that, and that's the problem with democracy, and people might not like this, democracy is a tedious process. Fascism is far easier. So what the European politicians and officials are hoping for is that they can postpone this problem till after the next election. They're more worried about getting elected to government and to positions. It's more, watching their pocket in the short term, as opposed to trying to be pragmatic and say, okay, let's take the hard road. Let's take the difficult decisions, even if it risks that we're not being re-elected, at the next election. Yeah. And they're not doing that. And politicians generally, not just here, but not just in South Africa, but all over, whether it's in the US, whether it's in Europe, they're more concerned about whether they're going to be re-elected. So make all these short-term decisions to try and buy votes. And that's classic case in Greece. That's what's been happening. That's been happening in the Eurozone, in many other countries.
Absolutely.
Where they're effectively buying votes year to year, from year to year, and doing that with debt and just piling up the debt.
Absolutely. And now, I mean, we're seeing that Italy is perhaps facing the same fate. We know that Mario Monti might be in the running. He is a former EU commissioner. But all that said, Asief, and we know what risks lie ahead for Italy and France, the point is that when you look at the market right now in South Africa, we are looking attractive from the valuation perspective. I know that you are pro-gold companies, which is very peculiar because it's very seldom that we actually meet a lot of the investors that would buy AngloGold Ashanti or Harmony or Goldfields. Tell us why you would rather buy a gold mining company as opposed to getting exposure through a physically backed ETF.
Yeah, okay. I'm positive on the gold price as such, but I don't think you should be married to it or stay with it forever. I do know, I do accept that it's got no utility value other than use of jewelry. Why I like gold shares specifically, because it's lagged the rand gold price quite considerably over a number of years, and there's good reasons for that. The high cost of mining in South Africa, the fact that costs have just skyrocketed, so any profits that they've made because of increased sales has been eroded away because of higher costs. However, what's happened now is that and it has been, the gold shares have been expensive, but however, on a forward basis, gold shares are looking very cheap. It will be and they are starting to pay dividends. You've seen Anglo Gold and Goldfield results coming out recently. It's been very good results. They've been paying quarterly dividends also in the case of Anglo Gold. So I think from a valuation perspective, the gold shares have priced in, it's not overly, it's not overly expensive as such, and from that reason I like it. You're going to get the dividend. However, if you hold the actual gold ETF, you'll get possible appreciation in the gold ETF, but you won't get a income or dividend from it.
Let's also touch on the interest rate environment in South Africa. Repo rate unchanged at 5.5%, so we're still sitting in a real interest rate environment, Asief, but we know inflation is ticking up slowly. What kind of impact is that going to have on your outlook with regards to exposure to equities? Because a cut surely would have helped the growth outlook and thus assisted earnings down the line.
Yeah, a cut would have helped, and we thought that yesterday was, the last chance that the SARB had to cut rates. If they had to cut rates, yesterday was it. So they are going to keep interest rates flatter for longer. They obviously worried about their credibility in terms of inflation targeting. They correctly pointed out that the weak rand will push up inflation above the target range of 6% over the coming year. They've also reduced their growth forecast. In fact, if they had by reducing the growth forecast, they should have in fact cut rates yesterday. But they're more worried about the inflation risks going forward. I'm not too certain. Inflation will probably go above the 6% range, but I don't think it's going to be a big problem, because globally, whether it's in Europe, whether it's in the US, and I think in China, you've got excess capacity. And in South Africa, you see with the entry of Walmart into South Africa, into the mass mart arena, the competition is going to increase. So I don't think you're going to have inflation being a problem. Our scenario is with the low rates. It's a 30-year low already. That's good for equities. That's good for consumer spend. It will stay longer for much longer period than what the current market is expecting.
Asief, let's also touch on Netcare out with a trading statement. Would you want exposure to the healthcare industry right now? I know the NHI is perhaps a little bit of a cloud right now, but the company expects that headline earnings per share could increase by as much as 26%. Company out with results on Monday.
It's a good set of results. That's the healthcare, the hospital groups have been getting good sets of results. It's a defensive company. If you're defensively positioned, you should be holding Netcare Mediclinic. However, we don't hold it in our portfolios because we thought it was a bit too expensive. All the good news has been priced in. We do hold other more defensive shares like British American Tobacco. So overall, in the current environment for Netcare, with the difficulties they've been having in the UK, I think it's a good set of results.